Tyler, the S&P 500 hit another all-time high earlier this year. Hasn't been a great year so far in 2024 for the stock market, but coming off of a wonderful return to a bull market in 2023, you and I have been talking, thought it would be a good idea to think even longer term, not just this great beginning of a bull run that we've gone through and the market back to all-time highs, but thinking even longer term than that and looking at some of our biggest winners. You had an idea for us to talk about stocks that we hold that have been our biggest winners in terms of percentage gains.
Hey, market's at an all-time high. Let's go. Let's celebrate.
But it's more than just a victory lap because it's easy to get caught up in what's happening right now. Before we get into them, I'm Jason Hall. This is Investing Unscripted. That's Tyler Crow with me. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, check out our special link. You see it on the screen, fool.com/unscripted. The Motley Fool's got its 10 best stocks to buy right now. They're going to give that to you for free. Be sure to check out that link. Okay, Tyler, how about you kick it off?
As you might expect, unless you're new here, I tend to dabble in waters that not as many people do. And unsurprisingly, my best performing stock comes from the steel industry. Nucor is, by percentage gains, my best performing position. It's, as of right now, I think it's a 340% gain, which it's pretty good, but it's a little misleading because you move around from non-taxable to taxable. Sometimes you lose your gains, or at least what it says on paper. But I think what's important here is if you look at Nucor in general, what has made it a fantastic wealth creator for me is if you actually look at the stock price gains for Nucor, I really haven't done much in terms of like stock price gain. What has really made it a true wealth creator as well is reinvested dividends.
I'm going to bring that up on the screen while you're talking about it, Tyler. This is looking over the past 10 years. So you see that blue line here, 235%. That's the S&P 500, 284% for the stock price gains for Nucor. And then, Tyler, this is exactly what you were getting into there. The power of paying a good, stable dividend and then growing that payout over time. When you have the opportunity to juice it even more, you juice it even more.
Nucor is one of the businesses out there that I would say on a business consistency, it's hard to beat. I know steel is typically a cyclical industry, but the unique way in which they make steel, it's called an electric arc furnace. If you're not aware, I'd go look it up. It's just a little bit more flexible manufacturing process than the traditional blast furnace way of doing it. And being flexible has allowed it to scale up, scale down as it needed to during the cyclical aspects of the industry. And from an operation standpoint, they take that to heart with its labor, where it doesn't pay the most in terms of like actual salary, but has a lot of bonuses for everybody on the line, not just management, but all the way down to the people working the line, working in the furnaces, get share in the profits of the business. So it's hey, when we feast, we feast. When we famine together. And it's translated into fantastic results for the business over the long term. And consistent dividends that are paid out. And one of the things that has made at least Nucor, in terms of like, you saw the discrepancy in the price return versus the total return. Another component of Nucor is that it's never been wildly overpriced. You've never seen it jump up to 50, 60, 70 times earnings like you'll see with tech companies or less profitable businesses. This is a quality company that typically trades a decent but not cheap valuation most of the time. And when you get things like that, you're buying into a long-term yield. You have earnings and dividend yields built into that tend to lead to long-term success. This is something that's been in my portfolio for just under 10 years. And as a result, it's a market-beating position. And with those reinvested dividends, I assume for probably the next 10, 15, it's probably going to keep on doing that. We're probably going to keep using steel, right, Jason?
Tyler, yeah, it's interesting that Nucor has been such a big winner because, like you said, the steel industry is so cyclical. And a lot of times those cyclical businesses, they really work out better as trades, maybe long-term trades where you buy at the low point of the cycle when the market's kind of capitulated on the stocks and that things are just going to get worse and you can get a really good valuation. And then the cycle turns and there's signs that it's already turned and you can ride the wave over the cycle and you invest over the upside of that cycle and then you determine an exit point. With Nucor has been so interesting because of that business model built on the EAF, where they have those variable costs they're able to bring down, that it's been able to be such a compounder. And part of that's because they've been really smart about locking up a lot of parts of their supply chain. They're a massive steel recycler because they use EAFs, and they've done a really good job of like acquiring the top of the funnel to make sure they have plenty of feed, building out facilities to make direct reduced iron. Again, a key feedstock that they use. So they've done a pretty good job of feeding the front end of their engine, which has worked out great for investors. I'm going to take us, Tyler, in a totally different direction, though. And we're going to move into a company that's riding another massive trend, and that's the healthcare trend, the boom of access to healthcare around the world, the drive for more precise medicine. And this is a company that is the absolute leader in robotic surgery with its Da Vinci robotic surgical system, and that's Intuitive Surgical. If you look at the stock, and I'm having to look away, I want to give as accurate as the number if I can. It's up in my portfolio, it's up 671.9%. So I promise, Tyler, I'm not trying to one up you on your new core there, but this has been just such a huge successful winner for me. And it's along the way, at some point, there's been different periods of time over the past decade where with Intuitive, there's been signs or concerns that the growth story was coming to an end. But between improving their product, between expanding different types of surgical procedures that it can be used for, and expanding geographically into new markets, the growth story continues to play out. Reported its earnings sometime in the past week, and they were, again, absolutely stellar. It has this really interesting model. It's typically called the razor and blades model, but a lot of times with those razor and blades models, Tyler, you know about this, the razor is a loss leader. You sell it to get into the market, and then you make money on the blades. Well, Intuitive Surgical makes a ton of money on its razor, which is the Da Vinci robotic surgical system, which is an incredibly expensive device. They make very good money on that device, margin on actually placing it. They make money training physicians and their staff. They make money maintaining it. And then they make money on the consumable implements that are actually used in the procedures, the surgical procedures that it is used for. And what we've seen, Tyler, is that install base has gotten mature. They continue to place new units at a double-digit rate. They continue to grow their revenues for the consumables parts of their business at a higher rate than they're growing new placements. And then on the other end, they get this wonderful operating leverage, whereas their sales of the consumables continues to grow. Those are really high margin items. The operating leverage is that their earnings per share continues to grow at an even faster rate than revenue is growing. And that's a sign of a really strong, really healthy business. They've done a wonderful job of getting into new markets. It's healthcare, so there's different regulatory environments in every market that they enter. They've done a good job of satisfying regulatory demand. And it's at a point now, Tyler, where you have an entire generation of surgeons who are trained on this, again, for the procedures that they're qualified for. You have an entire generation of surgeons that are using these devices. This is what they do. This is how they perform surgery. And that is an incredibly sticky, strong moat to have for a product like this because, well, surgeons tend to be surgeons for decades, right? So it's a really strong moat that they have that I think makes it a stock that, even as much as it's been a big winner, it's one that I plan to continue to hold in my portfolio.